We're approaching the end of the year. Despite all the turmoil from tariffs, inflation, and federal job cuts, the economy had a robust third quarter, and the stock markets are near all-time highs. So what do we know about what's driving the markets, and what does 2026 look like as far as your retirement investments might be concerned? Here to help us understand is our old friend Sandy Wiggins with WealthSpire Advisors. Sandy, welcome as always.
Great to be here, Bill.
Yeah, it's great to have you back. All right, so I mentioned all that turmoil. Yet year to date, virtually every stock market index is having a great year. What's driving that?
Yeah, both stocks and bonds are having a great time. International is also doing very well. And this is an opportunity for the economy to continue to strengthen, and there's an expectation that rates will be lower next year. Companies are making money, even though we have some pockets of the economy that are softer. But ultimately, it's about expectations.
Well, and about expectations, I thought there was so much uncertainty because of tariffs, for example. Like, how much am I going to invest? Well, I don't know what I'm going to be able to charge or how much I'm going to pay. Are the tariffs on? Are they off? We had thought that there was so much uncertainty there. And then, of course, inflation persisting. But nonetheless, earnings must remain robust. And in fact, the third quarter growth in our economy was 4.3%. I mean, it seems like, hey, forget all that uncertainty.
Yeah, you know, April was obviously a challenging month with the introduction of the tariffs, but we got some clarity over the summer around that. Companies continue to make money, and profits drive earnings, and earnings obviously increases the market.
Well, we have a graphic with some of those stock indexes that we were talking about earlier, and you mentioned an interesting one, the Morgan Stanley index for international stocks. International doing even better than the domestic. Here we are here. You see the S&P is around 16, 17%. Large cap in S&P even bigger. But again, that MSCI one you see there, that's the international. Why is that?
Well, you know, part of it is the U.S. has continued to do so well that stocks are at all-time highs, and that's a great feeling. So as an investor, you're looking for other places for value. International continues to look very attractive from a stock price point of view. And international's trailed domestic stock markets for a decade or more.
So they're catching up.
There's an ebb and flow, and international's having its day in the sun.
Well, and going forward, you mentioned inflation. There are various areas where you're going to be checking to see what the inflation factor is. Can you talk about that? I mean, is inflation going to be tamed? Can we get it under control? It's not yet at that 2% mark that the Fed likes so much.
Yeah, there's a lot there, and I think that's probably the biggest risk into next year. One is, on one hand, we can argue that the global economy is potentially reaccelerating with lower interest rates from the Fed and other central banks, and more money flow just creates more demand for products and services. So that is potentially an issue for heightened inflation to continue. The Fed, as I mentioned, lowering interest rates, that creates some excitement, so to speak, and inflation, that's not a disinflationary environment.
What about an AI bubble? Do you think that we saw several times during the year a mention like, could this be the bubble? Is the bubble here? Are we in a bubble? What's your take on that?
Yeah, you know, we're moving towards a bubble. Bubbles are elusive. You know, you don't know how much air the balloon can take, and ultimately what's going to happen. Is the bubble going to pop, or are we going to be able to let some of the air out in a reasonable manner? AI is driving so much of that, and so I think we still have some upside, certainly with the AI trade. But you don't want to put all your eggs in one basket, right? It's so easy to get excited about that, but diversification is very, very important in the grand scheme of things.
All right. Well, we are out of time, but I'm going to have you back to talk about China and the energy outlook, because with all the data centers, we're all scrambling to make sure we have enough in our grid, and China is way ahead of us. You talked about that a little earlier.
Yeah, again, AI trade is driving utilities, and so there's a market opportunity for discussion there as well.
All right. Sandy Wiggins from WealthSpire Advisors. Thank you so much for coming in.
Glad to see you, Bill.
You too.